So the market ended up down yesterday. We had a gap down continuation, a little bit of a midday counter trend move, and then a little bit of a counter trend move at the end of the day. Overall, capturing this short trade, plus 275 on Cobra 3 E-mini S&P, Cobra 3 E-mini NASDAQ, plus 1255. And so nice downtrend. The NASDAQ is more trendy and more profitable than the E-mini S&P on yesterday's trade, and in general that seems to be the case. Gap fill master stopped out right at the open, quick sell-off, minus 525 on that trade. Then we have adaptive moving average capturing this trade on the short side, plus 512.50, and we have gap continuation 2019 minus 325, stopped out on the counter trend rally. We noticed though that the market sold off on Thursday, recovered, and then the thought was, well, that was just a short-term sell-off. If it trades below Thursday's lows, then the market will be down further. And this was just this buying it back up into the close, which probably shouldn't have happened because the market opened down here and then it sold off some more. So technically, when you see this sharp sell-off retracement and then the market opens at the lows, technically that's weak. Doesn't always mean it will go down, but technically that indicates weakness in the market. And the market did sell off, even though this trade was stopped out. And so stock index swing in Q plus 475, quick move down right at the open. The best trade of the day was shorting the open. Gold opened up higher, and the stock indexes had rallied back and hadn't sold off much from the rally back. And real value, the market found real value down here, so the best trade was right at the open. Since risk assets like gold and bonds were trading at highs and yields were at all-time lows on the 30-year, and so the risk was perceived through coronavirus, number one. Number two is yield curve inversion. Actually, yield curve inversion was probably the biggest risk in the market. So the biggest concern yesterday. So stock index swing in Q hit that, and those are the trades. AT 2020 and 2020 short only hit the break-even stop. It's a quick move down and then a rebound. The market has a tendency to do that. It's hard to get a sharp move lower without much of a reaction. We know there's strong counter trend rallies, and so this break-even stop works for us. We don't hold it in every AT strategy. So we have AT 2019 over here that doesn't use that break-even stop, and it was up 412.50. And then you have AT 2020 NQ plus 1725. This was the trade of the day. AT 2020 NQ, nice short trade. So those are the only two trades. And so the SR counter trends that usually buy the dip took the day off and did not buy the dip, which was a good call on their part. And so we didn't have strategies getting short and long. The only long strategy in the stock indexes was gap fill master, which lost. The other strategies were short, and those were either profitable or hit their break-even stop. Actually, gap continuation was stopped out. It does have a tight stop, so it caught these two trades here, but this does have a tight stop. So that's the stock index trades. Let's look at the other trades on the day. We didn't get any more trades in gold. Big move up in gold this week. Asia Gold tried to short it here, lost minus 525. Cobra Euro up 575 on the day. And then we look at All Strategy Access 4. Crude Oil had a nice day yesterday. Small gain in Cobra Crude, aggressive, only $15. But the real way to capture crude yesterday was to get it down near the lows on the dip. The trend was considered up by SR Counter Trend 3 based on this recent price action. The trend is up, and a couple of nice trades this week on the B version. The A version also captured a couple of trades this week. Nice long trades in crude oil, counter trend trader, and so those trades were pretty quick. All Strategy Access 5, some nice trades this week in silver. Had a loss in natural gas, but no trades yesterday in All Strategy Access 5. And those are the updates for the weekend. We have those are all 74 strategies in our portfolios, and I'm going to show you the results for the portfolios as we're at equity peaks for most of them. So here's the latest results from the portfolio calculator. We will go through each portfolio now, starting with the stock index portfolio 2020 19 strategy portfolio, and we are at equity peaks once again. It's been a nice month, and we've had good trades on the long side, and then at the right time we've had good trades on the short side, and it is up 84.9750, and you see this equity curve turning higher and the drawdown right at 0. So that is the 19 system version of the stock index portfolio. The 38 system version of the stock index portfolio is, let's take a look here. It is up 18,635 on the month, right at an equity peak as well. And so nice gains on the month, and on the year it is up 35,000. On the 200K portfolio, we are also at an equity peak, up 11,000 on the month and 33,000 on the year. So pacing well on this. And for the 100K liquid day trade portfolio, it's in a $1,400 drawdown from its last equity peak, and up 29.20 on the month. So losing a little, it's underperforming the others because it is day trade and it hasn't taken as many trades, or a lot of the trades were some of the strategies, a lot of the profits have been some of the strategies that hold positions overnight. Right now in this cycle, let's see, that is the liquid day trade. That was the 100K day trade. So the liquid day trade portfolio is at an equity peak, and these strategies are up 11,932.50, 23,805 on the year. See how there's been very little drawdown so far this year. Very tight equity curve. And let's look at 25K portfolio. 25K portfolio has done really well. It is up 61.3250 on the month, 95.85 on the year. Nice equity curve. Let's go back and look at the 25K portfolio from 2019, the old portfolio. It's also at an equity peak. Reason I have these on there is I want to show you that these portfolios did not fall apart, but we just found some ways to make them a little better. And so up 14,000 on the year, up 68.05 on the month. And the stock index portfolio from 2019, it's also at an equity peak, and it's up 36,000 on the year, 19,000 on the month. It's actually, I think it's outperforming the new portfolio just a little bit so far. So I still like the new portfolio overall, even though this one has done slightly better. The market environment for our trading systems is very, very favorable. So let's look at the others. We have the 200K from 2019. It's in a $2,200 drawdown from its last equity peak. It is up 11,000 on the month. It's up 19,000 on the year. And all 74 strategies. If you traded all the strategies, you are at an equity peak, and you're up 25K on the month, 32K last month, 57,000 on the year. That's the weekly update for the week ending February the 21st. These are actively traded automated trading systems for the futures markets.